This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello, Breaking Banks Europe. Thank you again for joining us, all of our listeners. Today, I am going to be speaking with Louise Beaumont for the first portion of our show in the next installment of our series on the tech and innovation zoom in. And we will be speaking specifically about open banking. And then afterwards, we will have Paolo, who will be speaking to Mr. Open Banking himself to bring us a glimpse of open banking from the other side of the pond over in Canada. So to begin, I'd like to welcome our first guest, Dr. Louise Beaumont. Louise, thank you so much for being here with us.
Thank you for having me.
So our story goes back quite a few years now, but I always am astounded by everything I didn't know about you. And so preparing for this, I was looking through your LinkedIn. So for a brief introduction, and I'll let you expand afterwards, Louise is an incredible woman who does everything, including but not limited to currently sitting as an executive chair for Signoi. She is also the chair of the Smart Data Working Group for Tech UK. She's an advisor for Bottom Line Technologies, on the Advisory Council for Pay UK, and also, importantly for this conversation, a member of the Customer Working Group for the Open Banking Implementation Entity. So, with all of that said, Louise, this is just what you're doing right now. You've had a very varied and decorated career. Can you walk us through what ultimately led you to your current multi-hyphenated portfolio of roles, specifically having to do with payments and open banking?
Oh, well, thank you. That was quite the introduction. The way I would précis what I do is to say that I work with legislators and regulators to create disruption. I work with corporates to help them then cope with that disruption. And I invest in and take board and some advisory positions with the startups I believe are going to exploit disruption. And the red thread running all the way through that is open and accessible data. I believe if you create the data, either you as an individual or you as a business, you should be able to use that data in your own interest, for your own benefit, with your own control. And the reason what drew me to what you grandly describe as a multi-hyphenate career is a view that a 360-degree view on an opportunity is more interesting and ultimately more valuable than a single perspective. So I think that with having those three perspectives, to be able to create the disruption, help people cope with it, but also then to exploit it from a startup mentality is actually ultimately more valuable, not only to the companies that I invest in, but also to those corporates in understanding what's happening and what's coming down the line, but creating at the legislator and regulator level sufficient ambition to create significant economic change, which is where we see open banking leading us.
Absolutely. And I think we're going to touch quite a bit on the wider ecosystem later on in this conversation.
Yeah.
So bringing it to open banking, it's a buzzword. It's something we love to chat about at conferences, maybe not at this moment, but there's been a lot of talk about open banking, and it's often referred to in hushed tones or it seems like this nebulous, mysterious witchcraft type thing, even years down the line. So if you had to describe it to me in an elevator pitch, how would you describe open banking?
Well, there are two ways to describe it, one of which is incredibly dry but technically accurate, and that's to say it's the secure way to give providers access to your financial information. So true, so dull. So the way I think about it in a more sort of romantic way, using the power of metaphor and analogy, is to get people to think of themselves as a data Daisy. So we have two extraordinarily charming and good-looking chaps with us today. I'd like them to play along. Think of yourself as a daisy, so yellow bit in the middle, white petals all the way around. And think of each one of those petals as a petal of data that you could share about yourself, plugging it in via your identity. So you might have your current account, you might have savings accounts, you might have further down the line other things like credit cards. Further down into open finance, you might have insurance, pensions, and more. And as you add more petals to your data daisy, not only do you have a more handsome flower, you have a much more valuable data set surrounding you, which allows the delivery of hyper-personalized, predictive, and preemptive services. And it's always very dull to get caught in the here and now, because people think, well, you're just talking about giving providers access securely and safely to your financial information. How dull is that? So I think I would advocate analogy, metaphor, and in this instance, romance.
I love that. I love a flower, Louise. I think that's so fitting for spring as well. And I think for me personally, I think we often get caught up in the fact that, it is really boiled down, almost a technical standard, isn't it? It's not particularly sexy or romantic, though I do quite love the metaphor right there. And I guess if you could expand on that a little bit, we have seen various third-party providers, some banks start, allowing for account aggregation. But what are the benefits beyond having this fuller picture and value-driven services that you mentioned before with our data daisy? What are other benefits and what are use cases for this that you see broadly?
So the use cases are many and varied, and it never starts with the interesting stuff, because people start to build the initial building blocks. And account aggregation is an example of an initial building block, which is actually very useful, but only if you go on then to do something with it. So if I give you an example that would work both for consumers and for small businesses around account sweeping, and something that both the FCA and the CMA and all good and right-minded people amongst us are pushing very strongly for, and we're starting to see this come through now, is that for many people and many businesses, there's just too much month at the end of the money. Yes. So you might actually be running out of money on day 25, 26 of your month, when you might have between 28 and 31 days to go in your month. So you might have just too much month at the end of the money. But you may have a rainy day savings account, and it might be with another provider. So the power of open banking is that third-party provider that you allow to have that secure access into your current account and to see other banking accounts or other savings accounts. What they can do is they can sweep, according to pre-agreed limits, money over on, say, day 25, day 26, day 27, when they see you're just about to dip into the red, and they can see by how much you're going to dip into the red. They can sweep across just enough money to make sure that you don't go into that unarranged overdraft, giving the money to the bank when they haven't earned it or indeed deserve it. So what open banking allows in that example is it allows that sweeping, it allows monitoring, and it allows third parties acting as that payment initiator to sweep money back. And then once the money from, say, your wages, or in this current COVID times, government support lands in your bank account, you can sweep a little bit back to your savings account, thus staying in control of your finances. And you ask, what are the benefits of this? Well, I think there are some financial benefits for the individual consumer or the individual business. And I think there are also some health benefits, not least mental health benefits. So that's just one example. There are thousands of examples. So I just pulled out one for you there.
That is absolutely brilliant. And I think, as you said, account aggregation is just a stepping block to all of the other use cases, that are available down the line. Which brings me to the fact that maybe a lot of banks have now decided to get on board the open banking train. Mm-hmm. I'm going to put you in the hot seat for a moment. So we've now passed several open banking deadlines. First in the UK was January 13th of 2018, so over 2 years ago, and then most recently, just last month, March 2020. Last year, a year ago, March 2019, Tink, which is a Swedish open banking platform, surveyed 442 European banks, and they found that close to half of the banks failed to meet a recent deadline for PSD2, the underlying legislation, to provide a testing environment or sandbox for any third-party service providers. So this begs the question, and now we are in the phase in the UK talking about secure customer authentication. Why has open banking historically been met with such resistance? Why is it still being met with such resistance, would you say? And what are we doing to change that, more importantly?
So I think if we go back to the original timeline set by the CMA, there were two schools of thought, one of which was that they were appropriate and necessary to drag this sector first into the 20th century and then hopefully into the 21st century. And there was an opposing view that these were aggressive timelines that were completely unfair. It was impossible to do, which is all part of the program of resistance, right? And it is true that banks, of course, as any large, sophisticated organization needs to do, they need to manage and balance those competing calls on their time and on their resource. That's part of the normal course of doing business. I think it's obvious and clear and readily accepted that, of course, feet have been dragged, and also that this is, of course, a mixed ability class. Not everyone is good at this. Not everyone recognized the opportunity. In the beginning, it was clearly seen as a compliance game, and one, resist at all costs. Two, comply reluctantly. Three, make it all about API specifications rather than anything more ambitious. But I think, let's be clear that the clarity is starting to be brought to the game here in terms of the open banking organization, Open Banking, publishing stats. Now, they publish at the moment availability stats, they publish successful and failed API calls, they publish call response times, all of which is great, but they can't name and shame at the moment. And I think there is a sense that the market will decide who survives. And I think the market will be deciding quite decisively who survives in these COVID times, and that applies to incumbents as well as to innovators.
Absolutely.
Louise, can I jump in? I loved your analogy with the daisies, and comes to my mind, if open banking is a daisy, banks may be a cactus. Now, cactuses and open banking don't necessarily grow into the same vase, but we have all of them inside. Now, if we look at Europe, we have the UK, we have the Nordics, we have, let's say, continental Europe, and we have Southern Europe. Where are the daisies and where are the cactuses, according to you? Who is doing well in this transformation?
I think where I see really interesting talent is not so much in any particular geography. It's in the mindset and the entrepreneurial attitudes which have, and I know we're going to come to it, I'm sure, in due course, that describe people seizing the opportunity that COVID has presented to create really useful and really valuable services for people, which just happen to be enabled by open banking. So I think the world has slightly been redrawn. And now the question is, can you drive through the real value that we're looking to see from the services which are just simply enabled by open banking? I think it's a mixed ability class, both by participant and by geography. And I think it is hard to discern that any particular geography is ahead or behind, because the opportunity has just been substantially recast.
I completely agree with that. We will come back to that. There was something that you touched upon that goes really nicely with something I wanted to ask you, and that was the idea of open banking being a bit of a compliance fly on your shoulder. So in April of last year, your colleague in the open banking implementation entity said 2 years ago, open banking was regarded by many as a typical compliance exercise, championed only by a handful of fintechs. More tech spend driven by compliance rather than business case or customer need. This is no longer the case. Banks have very firmly moved from viewing open banking as a compliance exercise to an opportunity to compete and innovate. Conversely, a few weeks ago, our fintech darling in London, Tom Blomfeld, the co-founder and CEO of Monzo, stated the positive effect of open banking on innovation is nil. It is imposing massive costs to challengers like ourselves to implement standards that nobody uses. So these statements may seem at odds, but perhaps there is a common thread across them. So that brings me to two questions. First, do you think that open banking has driven innovation amongst incumbents? And again, as you just said, we've opened up, we're now in a very interesting situation where perhaps we've reset the opportunity. And two, what is going on with these standards, as we alluded to from the very beginning, as open banking as a technical standard?
So first of all, I don't think open banking has driven innovation. I think it's enabled it. Where there's the spirit of entrepreneurialism, it enables it. And I think it's enabled it amongst fintechs and other third-party providers, so incumbents maybe in other sectors. And I think this has forced deeply somnolent banks to rise towards a somewhat heightened level of awareness. And I'm making that statement sort of pre-COVID. I'll come back on to COVID in a minute. There are about 300 fintechs in the UK accredited on the open banking directory. And the proportions are interesting, right? Only 25% of those are banks, and the rest, 75% of that, are either fintechs or they are incumbents in other sectors. So that might say to you something about the scope of the balance of innovation, if you like. The real challenge in my mind is one of adoption. And it's, counting the number of successful API calls is it's kind of one of the basic hygiene factors. Actually, what really matters is the rate of adoption. And this means real people, real individuals, real companies using real services which are enabled by open banking. And at the moment in the UK, the estimate is that is between sort of 1.2, 1.3 million. We need to understand better the split between consumers and small businesses in that 1.2, 1.3 million. And we also need to see the number go substantially north. And I think the issue that we see, particularly in the COVID reality that we're living through at the moment, is it was not the bank's first thought to leverage open banking to deliver either CBILS, the Corona Business Interruption Loan scheme, or to use aggregators who use open banking data to be able to deliver CBILS capability, or even to be able to prove what freelancers earn, for example. It was not their first thought. This is not the front and center of mind for them in terms of how they can deliver value to their customer base, or how they even just help their customers survive this experience. They have fallen back on their old established mechanisms. So I think let's drive the current experience that we're all living through to make this the first thought, not the last, in terms of how to accurately and efficiently deploy resource to the nation's small businesses and to consumers and freelancers as well. In terms of what's going on with the standard, there is a very real view that the open banking they started with lowest common denominator standards because of the poor technology capability within the banks, so that the banking standards, the standards, the API specifications that were created were very basic to take into account this. As I said charmingly, this is a mixed ability class. And I think there really does need to be a really strong push to drive to make these much more valuable. So I would call out two in particular. One, variable recurring payments. Anybody who has to pay gas, electricity, or anything which varies on a monthly basis needs this service. So we need a consent mechanism that works for variable recurring payments. That's absolutely essential, and I'd like to see the CMA mandate this. And we also need a mechanism to do refunds for online payments. And again, this is about making sure that we've got something which is workable and not just to allow backsliding to that lowest common denominator.
if I may, I think that point that you made about incumbents not immediately jumping to open banking as the first, tool to really address concerns right now. I was very impressed by the likes of funding options, Iwoka, Capital on Tap, Starling, who actually have been imploring the Chancellor of the Exchequer to openly state that open banking is safe, and actually that they can do a lot with that if they would just announce it, across the nation to all of our SMEs, that connecting accounts can actually be very helpful for them. So it's interesting, the different approaches. So we actually just spoke about this, but there's lots of new use cases and opportunities presenting themselves. You mentioned already Sybil's and all the various freelancer kind of hackathons that have been brought together, projects that have been powered by open banking. And I'm just curious if you've seen anything lately that's been powered by open banking that you find that is really great, that is valuable, and broadly bringing value to its customers, whether that is to you as a person or you as a small, medium-sized business.
So the way I think about the COVID pandemic that we're currently living through is this is a period of enforced and radical change. This drives a very real opportunity out for us to be able to reinvigorate the real potential of open banking. And innovators absolutely have stepped up. Interestingly, the open banking have on their website, they have a page dedicated to people doing smart things with open banking. And there are some established incumbents in there. So people like Experian have offered their affordability passport for free, and that's built on open banking. But everybody else on that roll call of honor, people who've stepped up during this crisis to absolutely leverage the potential of open banking, is, I'm afraid, in that fintech or alternative finance space. There isn't a big bank name in there. And I think that's incredibly telling. That's just not their first thought. So Iwoka have launched their open lending platform. Funding Options have partnered with 20 lenders who will use data sourced via open banking to help their partners make these rapid and accurate lending decisions. COVID Credit UK is helping self-employed people to prove their income. And AutoPay, which I thought was very smart, have launched their neighbor-to-neighbor payments ability free for those volunteers who are looking after vulnerable or self-isolating neighbors. There are many more. But what I would like this to be is people's first automatic thought about how to deliver value to customers, not their last resort when they've thought about, oh gosh, we've got to ramp up our contact centers, or how do we get enough people answering or calling small businesses back. That is 1990s technology, and we can and should do better.
Absolutely. And I guess just to wrap and round out this conversation, you've alluded to it already, not just open banking, but open finance, and as you said in your introduction, broader open data. Could you share with us any parting shots, but also how you envision the journey from open banking to open finance and, one day open data?
Yeah, the way I look at it is through that prism of the data daisy. We start with open banking, we bring it into open finance, and that includes insurance, pensions, and beyond. You can imagine many other sectors you might want to access the data that you create with and for many other sectors. For me, the true destination is smart data, which is, it's not just open, it's actually smart, where all of your data that you create through your activities of all descriptions works for your benefit within your control. And that's whether you as a consumer or it is you as a business. And of course, let's not forget those large corporates with incredibly complex treasury functions that should absolutely be benefiting from the power of open banking and beyond.
Well, Louise, thank you so much for joining us for this first half of our episode. If you want to tell our listeners where they can find out more about you, that'd be wonderful.
I am in all the places you would expect to be, whether it is on LinkedIn or less often, actually, on Twitter. So you can find me in either of those places. I do not hide.
You certainly do not. You are not a wallflower.
Thank you.
All right. Well, thank you so much for joining us for this first portion of our Tech Zoom In. stay tuned for the second part with Paolo and Eyal.
At timepledge.org, we are building the largest free coaching and advisory platform for entrepreneurs by providing mentorship opportunities based on pledged time. Our network of seasoned industry experts acting as coaches is working for free, pledging their valued time to the next generation of entrepreneurs who will change everything. Our portfolio of sessions goes over every skill an entrepreneur needs to successfully launch his or her startup, from how to pitch and behave with investors to how to best market your idea online, or even how to best manage your team. We have the perfect sessions with the perfect mentors. Want to learn how to become the best entrepreneur you can be, or mentor the next generation of entrepreneurs in Africa and Asia? Please visit timepledge.org and let's get you started.
Welcome back to the second half of this episode of Breaking Banks Europe. We are talking platform mindsets and open banking practices. We just heard from Louise Beaumont earlier on. She was inspiring and entertaining, creating some romantic explanations of open banking, like daisies that collect value for customers to share with the others. And we have with us another guest. His name is Eyal Sivan. We are challenged Eyal to do as much as good as Louise was in the first half. So she was romantic, we can be philosophical, because I know that Eyal is a philosopher. Basically, he actually performed as a head of a platform product at the CIBC, which is a major bank in Canada. He did that for 15 years. And then he decided to move on, basically following his dreams. So when I was a kid, I wanted to become an astronaut. And that's very difficult. But Eyal wanted to do something more complex. He wanted to be Mr. Open Banking, which is very challenging. But as far as I can see, he's very successful advising his clients around the world about the transformation to open banking. So let's welcome Eyal Sivan on Breaking Banks Europe. We're going to listen from him, his ideas and experience. Welcome here.
Thank you, Paolo. It's great to be on the show.
Was it a fair representation of your history and your motivations?
Very flattering. Thank you.
I want to get a bit deeper into this, actually. So what really brought you to open banking and to platform thinking, which might not necessarily be the same thing?
Sure. So I've been in technology for 25 years. And as part of IT, it's really difficult to get away from the notion of platform thinking. Platforms are not a new idea to technologists. That's what software is. You come up with a language, you come up with a standard, and you write code or build hardware based on those standards. That's what platform thinking really has. Platform thinking has always been at the heart of IT. So it's nothing new to the technology sphere. I really specialize in integration. And when you talk about integration, that's about systems talking to each other through these things that have now become very popular, APIs, but they've really been around for decades and decades. And that's really been my wheelhouse. That's where I built my startup in the 90s and eventually joined the bank as their API specialist. As I started to build out their integration capabilities, it became more and more clear that increasingly integration was becoming the applications. Integration was everything. All the problems that the bank faced in terms of trying to pull data together, create compelling solutions, offer those solutions to customers, analyze that data to be able to come up with next best offers. Those were all integration challenges, and you needed a strong integration platform to be able to solve those problems. Now, keep in mind, what I'm talking about is an internal problem. This is within the four walls of the bank. They have a lot of data. They're generating more and more data every day, and they need to be able to sort through that data and make decisions based on that data and offer the right products to the customers. So that's really what I helped them do, is build the plumbing that brought all those systems together. I came at open banking from that direction. My pedigree, my specialty is APIs. So when I took the post of head of strategic platforms and started developing our in-house API platform, I did a lot of evangelism. I go to shows and talk about APIs, talk about what the banks were trying to do with APIs. And it was at a show in the Nordics, in Oslo, where I first ran into a gentleman named Gunnar Berger, who was the head of open banking for Nordea. Now, the Nordics are generally further ahead than everybody in their thinking about advanced banking solutions and the future of banking. Open banking was no exception. They were ahead of the regulation. Their banks were already going down the road of creating developer ecosystems based on APIs. But when I met Gunnar, this was the first time I'd heard the term open banking. And I said, what do you mean open banking? And he goes, oh yeah, there's this whole thing going on. It was about three and a half years ago, to make the banks adhere to a standard for the entire ecosystem so they can all talk to each other. Now, being a tech guy, I said, wow, like a whole platform for all the banks to talk to each other, not just to organize their data internally. And he said, yeah, that's pretty much the idea. So I went off and immediately fell in love with this whole idea, started watching YouTube videos of legislators in the EU arguing about PSD2 and other laws that were driving open banking forward. And, Louise talked about the romantic side. I absolutely fell for that as well. I thought there was something really amazing happening. It wasn't just about a commercial opportunity or even the age-old debate between innovation versus stability, etc. It was about something greater, about something more fair, more fluid, something that created win-win scenarios. Paolo, I know you're a philosopher as well. Last time we met, we talked about win-win non-zero scenarios where you can come up with outcomes that don't compromise with winners and losers. They don't create zero-sum outcomes. And open banking was one of these non-zero scenarios where you had a win for customers because they're going to get better financial products that are more fair, with reduced rates, more financial inclusion. A win for governments because they're actually driving competition and creating better outcomes for their citizens and creating a system that is more transparent and more fair and more open. And frankly, they don't know it yet in a lot of cases, but a win for banks because you're generating a lot more financial activity in spaces that previously were untouched. And that's the big misnomer, I think, one of many in the open banking space. There's this idea that there's a bunch of opportunity that's being taken away from banks. The fact is, they weren't offering those solutions. They weren't offering those products. They weren't even geared to be able to offer those products. And it is only through the establishment of an open standard that allows the entire financial ecosystem to act as a platform that opens the doors to these new kinds of solutions that really exist on the long tail of banking. If I may give a great example, this was one of the early ones that I ran into that opened my eyes to the power of open banking. I discovered it through the Open Bank Project, an amazing piece of work being done by the folks at Tesabe, and that really predates the open banking standards. If you go to the Open Bank Project, you'll see a marketplace of different bank offerings, usually UX focused, tied to different backends, and done in a way that the front ends can talk to lots of different backends. So let's be plain, that's a big part of open banking. I create one solution and it can talk to all the different banks all together and bring that data together. The solution I found was banking for the blind. For me, this was a light bulb moment because I worked, I should say, at a major bank. There is no way you could ever build a business case, I would say at any major bank anywhere in the world, to build a UX for the blind. It just doesn't make financial sense. There aren't enough customers who fall into that category to be able to invest what is a significant sum to create that kind of customized UX. But if you pull together all of the blind customers in the world and say, I'm going to offer customized experiences for the blind so they can do their banking, so they can be financially included, but in one spot that can now speak to all the banks around the world, well, now you have a very compelling business case that is helping people who were having trouble getting help beforehand, and that is making society a more fair and more inclusive place overall. So I think open banking is really addressing not just a question of creating competition and financial opportunity, but a question of inclusion and fairness and, frankly, what is morally right as well. And that's the attractive, almost romantic side to it.
So Eyal, you said something very interesting. You said that it all started with the idea of integrating elements, so data. Banks have a lot of data, they need to integrate it. And there's a lot of data outside banks where people live, and that also needs to be integrated. Now, the reason why open banking is valuable, which might be aspired to platform theory more than open banking language, is that the value is not to put together data, but to create relationships. So relationships create always a win-win because there are two parties that put things together and that generates something which is valuable. Now, I feel like many people still think open banking like an API enablement, so a data play, a standardization game, a creation of connectivities, but they're not capable of thinking platforms in terms of generating these interdependencies among actors, users, providers to generate relationships, which maybe is where the fintech are also failing a bit, because a lot of fintech conceive themselves like holders or baskets of technical capabilities, but they don't necessarily know how to turn that into a client engagement. User experience and user engagement are not the same thing. So what do you think is the missing element here to enable open banking people in banks, but also outside, to really think platforms in banking? Because they don't.
Yeah. So there's a lot of questions wrapped up in that question. So let me try and take them in turn. The note about fintechs is an interesting one, and it made me think of Nina's comment earlier regarding Tom's comment on open banking, right? The Monzo reaction and how it was a failure and so on. I think you have to look at the motivations of all the players involved, right? As Paolo says, even the fintechs have a certain interest in building a walled garden around themselves, especially the early entrants like Monzo. The fact is, Monzo became very popular on a viral wave in the UK well before there were open banking regulation. And now they're sort of struggling a bit in terms of raising another round. And if you look at what folks like Starling, who perhaps were a little later to the game, but much more oriented towards a marketplace model and adhering to the standards and being, frankly, more friendly with the cash, are really telling a different story. So when you look at someone like Monzo, I think you really have to ask yourself, why would they say something like that? Just because somebody is a fintech or a new player does not automatically make them pro-open banking or pro-APIs, especially in the aggregator space. If you're an aggregator and your whole value comes from hooking into all these proprietary systems at bank backends, and then along comes this standard that effectively commoditizes the very thing you do, why would you necessarily be for that? So I think you find a lot of new entrants tiptoeing that balance between being interested in their own success, maintaining their own proprietary IP, but also saying what they know is the right thing and being on the right side of history. So fintechs are an interesting one. I wouldn't automatically say, did they screw up? I would ask, did they perhaps, quote unquote, screw up on purpose, right? Sometimes they don't really have an interest in opening up. That's why I really like what Ann Bowden and Starling are doing. They really are doing what they preach in terms of their marketplace model. Now, to come to the big banks, what do they have to learn? What can they do? How do you act like platform companies? I just came from one of those big banks, so I'm intimately familiar with the challenges in trying to get them to think in platform terms. I built out the platform organization at CIBC. There was no such role. When I took the role head of strategic platforms, that makes it sound like there's an army of strategic platforms people. There was not, right? The whole idea of strategic platforms, in other words, where platform does not mean the hardware that you're running stuff on or the database software, which is usually what it means, but product platforms for creation and co-creation, platforms where you're creating environments internally and hopefully externally where developers can come along and build things that you never even thought of. Exactly as you said, Paolo, the point of a platform is to generate value for the adopters of that platform. In the case of a bank, that means internal development teams. This bumps up very closely to the world of digital transformation and general legacy modernization that Breaking Banks often talks about on all versions of their show. So digital transformation is a big, hairy problem, and it comes down to that D word, developers, right? How do you make your developers productive? How do you make your developers happy? How do you create an environment that allows them to be creative and generate ideas that, again, you may have never even thought of in advance? You've created a platform for creation which allows them to come up with stuff. This notion of empowering developers is hard enough for a bank internally. Okay, this is not an easy thing for them to do. They are often geared towards safety. and lots of processes which ensure that safety, and lots of checkpoints and lots of gates that make sure software goes in and updates go in as slowly as they have to be safe. Now, along come technology companies, and they challenge these banks to move faster, to innovate faster, release faster. In order to do that, they have to revisit their delivery processes. They have to revisit the systems that they've built their software on, and they have to come up with plans to move from existing legacy systems that have been there for 40 or 50 years to these newfangled cloud-native microservice API-based systems that allow them to move very fast. Again, that's a challenge internally. When you say to them, hey, not only do I want you to do this internally, empower developers and create developer ecosystems on platforms internally, but now expose those platforms externally to third-party developers and run an external developer community where you are effectively treating developers like customers, well, that's a huge thing. For banks to start to wrap their heads around developers, third-party developers are our customers, it is a massive cultural step. It is not something that's in their DNA. It's something that they have to often move mountains and change org charts to be able to adjust to. To treat your external developer portal as a channel, the way you would treat online banking or your branches, is an entirely new idea that is very challenging for them to adopt. So a lot of people like to vilify the banks for not doing it.